In this episode of Crypto Chats, Kyo and Jenny dive into the complex issue of whether a Bitcoin ETF will eventually gain approval in the United States. As two longtime observers of digital asset markets, they share invaluable insight into why regulatory acceptance seems inevitable, based on historical precedents and rapidly evolving industry adoption trends. Tune in for their lively discussion, covering perspectives on approval timing, factors to consider when selecting ETFs for investment, as well as strategies traders may employ. Most intriguingly, Kyo proposes a thought-provoking idea around proactive collaboration between sector leaders that could play a pivotal role in advancing productive policy discussions. Sparked by their inspiring exchange, are you ready?
Hey Kyo, thanks for taking the time to chat today. I know you've been following the crypto markets closely for years now. What's your take on this ongoing debate around US Bitcoin ETF approval?
No problem, Jenny. Always happy to discuss trends in this space. In my view, it's really just a matter of time before the SEC gives the green light. Care to hear my analysis on why it seems inevitable?
Absolutely. Please go ahead and share your thoughts. This is a hot topic in our industry, so I'd love to get your perspective.
For starters, we've seen innovative assets be brought to market first overseas due to lighter regulations. Gold ETFs launched this way and were later approved in the US. The same pattern occurred with commodity ETFs, and even rejected Bitcoin ETF structures from other regions. Global precedents will be followed as the space matures.
That's an excellent historical parallel. What else makes you believe approval is just a timing question at this point?
A few other big factors. Retail demand is massive now on the back of broader crypto adoption. Institutional players are accelerating this decentralization trend, which further legitimizes the asset class. Also, global market pressures and competitive incentives exist to tap this emerging asset pool. Maintaining rejection is becoming untenable long-term.
You raise great points about how radically and quickly the environment has changed. How long do you think it may take then based on what we're seeing?
It's always tough to predict regulation, but I'd estimate within the next 2 years, we could see the first US spot Bitcoin ETF. The success of futures products shows compromise is possible if concerns are allayed. As long as industry development continues responsibly, 2023-2024 feels realistic.
Interesting forecast. Given your experience trading markets, what strategies would you advise for potential ETF investors?
For those with a longer-term horizon, dollar-cost averaging combined with patience is usually best. Pullbacks can offer opportunistic entry points as well. Technical analysis may aid traders, but perfect timing isn't possible. Volatility is a given. Above all, portfolio allocation suited to one's risk profile is key.
Solid advice, thanks now. How might ETF availability impact the underlying crypto sector?
Greater institutional flows and retail access from ETFs could add stability through increased adoption rates over time. However, some analysts argue it may dampen volatility. The overall impact on prices is uncertain, but greater accessibility is undeniably a net plus for continuing crypto's assimilation into traditional markets.
Really appreciate you taking the time to share your insights, Kyo. This was enormously helpful for wrapping my head around such an important evolving topic. Let's be sure to keep the discussion going.
My pleasure, Jenny. Always happy to discuss market developments with a fellow industry watcher.
I find our discussions so valuable for making sense of these complex issues. Do you have any other perspectives to share on Bitcoin ETFs?
You're very welcome, Jenny. I enjoy our talks as well. Let me provide a few additional angles based on years of market study. First, when weighing different ETF options, it's important to consider factors like underlying assets, expense ratios, average volume for liquidity, tracking performance records, and issuer experience in crypto markets. Regarding approval timing, while 2023-24 seems reasonable, surprises could happen sooner given evolving conditions. Progress is steady, even if gradual. Also, some traders may attempt leveraging short-term ETF price swings by layering in technical analysis of charts. But market volatility ensures perfect timing techniques are impossible. Patience remains key. Lastly, I think the full impact of ETF availability on crypto is uncertain. While accessibility gains could boost adoption rates fueling stability, others speculate funds may dampen volatility between token prices and fund flows, depending on structures employed. Overall transparency is ideal to assess longer-term effects. Does any part of this extra context need more explanation?
No, this extra context is really helpful. Thank you for providing these additional angles and perspectives. It's fascinating to think through all the dynamics at play here as this space continues to develop at such a rapid pace. I especially appreciate your prudent advice about imperfect timing techniques and the importance of patience. Getting invested in promising innovations but managing expectations around volatility seems critical. Is there any one area related to Bitcoin ETFs that you think could benefit from further research or discussion to help drive productive industry progress?
You're very welcome. I'm glad we could explore more nuances around such an important evolving issue. To answer your question, one area I think is still relatively unclear relates to the potential effects large bid-ask spreads could have on ETF share prices during instances of extreme crypto market turbulence. More transparent research and data analysis on liquidity provision during past black swan events may help improve fund structures and assuage lingering regulator concerns in this regard. Product innovation and education tend to go hand in hand with overcoming obstacles to positive change over time. I look forward to further insights that develop on this as discussions continue both within the industry and at regulatory levels worldwide.
Excellent point about liquidity provisions during high volatility periods warranting additional scrutiny. It's clear from all the points you've made that broader approval and adoption seem inevitable as regulators continue progressing. At the same time, there are still knowledge gaps around nuanced factors like liquidity provision during high volatility periods. As leaders in this industry, what more can we do to address such areas and help move discussions forward productively, proactively?
You raise a great point, Jenny. As innovators dedicated to building this space responsibly, we have an opportunity to contribute meaningful research on shaping optimal solutions. Perhaps it's time major industry players come together and put resources into collaborative data analysis projects. Imagine if the top exchanges and fund issuers shared anonymized order book details from past high-profile crypto market events. Regulators and analysts could gain deeper insights into liquidity dynamics to ensure stability as accessibility grows. Such proactive initiatives signal our commitment to building understanding and overcoming regulatory concerns together in an evidence-based manner. What are your thoughts on starting informal discussions with peers about establishing an industry consortium focused on collaborative research like this?
What an excellent suggestion, Kyo. I love the idea of spearheading more organized data-sharing efforts through an industry consortium model. Not only would the research generated help address knowledge gaps proactively, but bringing prominent stakeholders together communicates our willingness to have transparent, good-faith discussions. This type of multifaceted approach, employing both education and coming to the table openly, seems perfectly aligned with progressing regulations prudently over the long run. I think feeling out initial interest from important players could yield very promising results. Thanks for the inspiration. I will start reaching out to lay the groundwork and will be sure to loop you in on developments. Our sector is ready for solutions-driven leadership, and conversations like ours will hopefully move us closer to that.
You hit the nail on the head, Jenny. This multi-pronged strategy combining research, transparency, and ongoing dialogue is exactly the type of prudent, proactive leadership that can rally stakeholders and drive the constructive regulatory changes we all want to see. Please do keep me posted on your outreach efforts. I'm enthusiastic about helping develop an industry consortium model in any way I can. Together with open-minded peers, we have an opportunity to shape policy discussions for years to come meaningfully. Thank you for championing this important initiative. I look forward to supporting the progress.
Friends, I hope you found our discussion insightful for envisioning new ways the crypto sector can collectively progress industry-wide priorities like greater Bitcoin ETF accessibility. As leaders, we must take the initiative in coordinating collaborative efforts that address policy concerns proactively, through evidence and an open exchange of ideas. I'm excited to get the ball rolling on exploring interest for a research consortium among your networks as well. United, our innovative spirit and commitment to responsible standards can help bring increasingly positive regulatory changes within reach. Onward and upward.